In this module, we're going to look at money, in particular, client's money and client accounting. Client's money is money that doesn't belong to the agent. It belongs to the client, and the client can be the landlord, it can be the tenant, it can be anybody other than the agent. So, client's money should be held in a specifically designated client's account, which should be entirely separate from any trading or business account. It should be paid into the client's account as soon as possible, and it can only be used for the purpose for which it was intended. Money held should be precisely identifiable to a specific client or tenant, and it must be regularly reconciled to ensure that the correct amounts are being held. The account and the individual sums held for each client or tenant can never be overdrawn, and the bank must give an undertaking never to take these funds to cover any of the agent's debts. For tax purposes, the agent will need to keep records of this for 6 years. Client's money includes all of the following sums of money that you may hold: rents paid by the tenant's holding deposit, money held on account for landlords, for example to cover repairs, and any security deposit paid by the tenant. Rental income is held by you as an agent for the landlord, and any fees you earn or charges for work carried out to a client's property should be transferred out of the client's account into your trading account as soon as possible. And evidence in the form of invoices and receipts will be required to justify your fees, and this should all be done as soon as possible. Once rent is received and cleared, you should transfer the monies to the landlord, less your fees and other expenses. Deposits that require statutory protection and are held by you as a stakeholder should be held in this account. This, in practical terms, means you're the middleman between the parties, and you can't touch the money without consent from the landlord and the tenant. You are a stakeholder there. Deposits held under other tenancy contracts outside statutory protection are held as an agent of the landlord. Because there's no statutory protection, any deposit paid and held under a tenancy outside statutory protection are held as an agent of the landlord. The tenant pays the money, there is no statutory protection, so the money belongs to the landlord. You must therefore carry out the wishes of the landlord as if they were holding the deposits themselves, and you must make payments as dictated by them. You will have landlords who live abroad, and so there are strict requirements for accounting in relation to overseas landlords. So HMRC require agents to act as tax collectors when you're acting for a landlord that resides outside the UK for at least 6 months of the year. If you have clients who are overseas, you, the agent, must register with HMRC under the non-resident landlord scheme. Once you are registered for this scheme, you will have to deduct tax on behalf of HMRC. You will have to hold that money and then pay it over to HMRC and account for all that at the end of every quarter. There will be an annual return that's required as well. This annual return will give details of all the landlords who have had tax deducted, the gross rent collected, any expenses incurred, and the tax that has been paid. Penalties of up to £3,000 plus the value of the unpaid tax can be levied against an agent who fails to make such a return and for giving incorrect details in the return. You will be able to pay the full rent over to the non-resident landlord if and only if the landlord has registered with HMRC for this to take place. You should only do this where you've been provided with a copy of the HMRC approval by the landlord. No tax will then be deductible, but details of the landlords and the rents received must be declared on your HMRC annual return form.